Well, we joined the New York Exchange in 1981, many years ago. And so prices then, when we first came on board, we were about half price. And we kept coming down every year to now. It was sort of the final solution for investors. We have a great deal for investors.
Why SCHD could be the best investment for 2025. The stock market's future might be uncertain, but one investment is standing out as a steady winner. Welcome back to Finance Break. Today we're diving into a smart, reliable investment for 2025, SCHD, and why it might be one of the best places to put $225,000 this year. If you're looking for long-term growth with minimal stress, SCHD has been a rockstar performer. Over the past decade, it's averaged an impressive 11% return per year, and in the last 5 years, that number has climbed to 12%. But it's not just about growth. SCHD also offers a 3.5% dividend yield, providing consistent passive income. And get this, during the 2022 market downturn, when the S&P 500 fell over 20%, SCHD only dropped around 3%. That's resilience at its best. Now, what makes SCHD such a powerhouse? It's not just luck, it's strategy. SCHD carefully selects companies that have been paying and increasing their dividends for at least 10 years. That means no shaky, high-risk stocks, only stable, profitable businesses. Plus, SCHD focuses on industries that thrive no matter what's happening in the economy, like healthcare, consumer staples, and financials. That's why it holds up so well during recessions. So what's next for SCHD in 2025? Analysts predict a 9% price increase, but when you factor in dividends, total returns could hit 11 to 12%. Not bad for a low-risk investment, right? The Federal Reserve is hinting at interest rate cuts, which could bring more market volatility. That makes dividend-paying ETFs like SCHD even more attractive for investors looking for stability. How does SCHD compare to other popular ETFs? SCHD versus QQ. Tech-heavy QQ thrives in bull markets, but struggles in downturns. SCHD, steady growth no matter what. SCHD versus JEPI. JEPI offers a higher yield but at the cost of long-term growth. SCHD strikes the perfect balance. SCHD versus individual stocks. With 100-plus holdings, SCHD spreads risk, unlike buying single stocks, which can crash at any time. Okay, so you're ready to invest $225,000 in SCHD. What's the best approach? Lump sum. If you believe in SCHD's long-term growth, investing all at once could maximize returns. DCA. Investing a fixed amount monthly, say $2,000 per month, helps smooth out market volatility and reduces risk. If you invest in a Roth IRA, SCHD's dividends grow tax-free. That's more money in your pocket over time. So is SCHD the best investment for 2025? If you're looking for steady returns, low volatility, and passive income, it just might be. Let me know your thoughts in the comments. Don't forget to like, subscribe, and hit that notification bell for more investing insights. Invest smart, build wealth, stay consistent. Thank you very much for watching this video. Don't forget to like and subscribe. See you soon.